Good afternoon and welcome back to our Rex Fuels channel, where we discuss issues and trends facing the oil and gas industry. If you're new to the channel, kindly like, subscribe, and share to stay up to date with the current trends. We have with us today Pranav Kant, a veteran of the oil and gas sector and an expert on strategy and marketing. He has held various leadership roles in Total, BP, and APAR. Welcome, sir.
Thank you. And it's a pleasure to be back here again.
It's always a pleasure to have you here, sir. My first question to you today is, oil prices rose 2% on Friday, but recorded a weekly decline. Do you think Friday's increase implies that the rally will continue?
We believe that the markets have been trying to decode and come by, and that's where it reflects a kind of very complex and non-linear understanding as to how things are poised ahead. So we have seen for the last more than 2 weeks now, the markets over a course of 1 week have moved almost about 8 to 9%. In the course of a week, while the macro data have not, and if I may say so, neither have we observed any other geopolitical risk has changed, which could warrant such volatility. So it's basically trying to figure out how things look and what are the things which are concerning the players is the supply side risk as to how much of the supply side risk exists in the market going forward. And as we have mentioned that the supply side risk fears simple data point, which we advise our viewers to look into, that OPEC Plus has been consistently producing below its quota. Now, about 2 months back, it was 2.7 million barrels per day of the deficit from the quota and the actual production. Now it is at about 2.5 million barrels per day. So the important point is that the OPEC Plus production, despite all the challenges, are inching up. But they are inching up. So that is one data point. And in terms of the other supply side risk, besides Libya and Nigeria, there are no great risk because the Russia is reporting increase in production month on month on month. So the biggest fear on the supply side is already taken care of, and the minor fears in any market would still be there. While when we come down to the demand turn relating to the inflation and the upcoming Fed rate hike again. So the growth in demand is likely to be less robust. It's still going to be growth, but less robust. So coming back to your core question, do we see a rally ahead given the Friday's performance in the market? Categorical answer would be no. We see a significant downside risk, again touching the 100 barrels, $100 per barrel for the WTI from the current 7, as you say, and it could go even lower.
Okay. And my final question to you today is, does the falling prices of furnace oil, the fuel used in the shipping industry, indicate the onset of a global recession?
Very good data point which you have shared, and just to add a few more data points to that, we have seen over the last lots of the data point coming on to suggest that the inflation risks are coming down. So the commodities, the food index, and if we can look at the container price index, so all these are significantly down. So this holds the hope that in the weeks ahead, we could say that the peak inflation is behind us. So that's more of a hope, but we strongly believe that the peak inflation, the context for the other kind of multiplier effect to come into play, and where oil fits in primarily. So the furnace oil and the commodity, the food price index and the container price index are some of the data point which indicates easing of the inflation and the subsequent price concern. So yes, we accept we expect it to be solved.
Thank you so much for giving your insight into the market. And thank you for being here today. As always, it was a pleasure to talk to you.
Thanks. And likewise, yeah. Thank you.
And thank you all for watching. Continue to show support by liking and subscribing to the channel. See you soon.